when rates have skyrocketed like they have, and I shouldn't say skyrocketed because, again, I'm far older than you gentlemen here, and I've got a mortgage background and a banking background, but I remember when mortgage rates were 11, 12, and 13%,
Yeah.
right? So 6.65, which is the national average right now, is not high. I mean, I
Right.
remember days when we were like, all right, they want the loan, but will it actually pass the state APR test? That was the only way we could offer it to them because rates were so high. So I
Mhm.
think we're a bit ungrateful with the times that we're in because we're
Yeah.
so accustomed for that 1.5 years where we had 2.753% mortgage rates. But back to your point, you think that a 30-year mortgage offers you peace of mind, right? And that it's a fixed rate for 30 years. Well, back to what I was saying when it comes to promo rate stacking, especially now that rates are the national average 6.65, banks have flooded the market for their HELOC products on what's called a promo rate, an introductory offer, just like what credit cards do. Now, during COVID, this was pretty tough because, and I did get one, but it didn't make a whole lot of sense for the bank because
Mhm.
their HELOC rate was 2.25, but their promo rate was 1.99. That doesn't move the needle for the bank. It's not going to bring in a lot of extra customers. And banks and credit unions use a HELOC as a tripwire for marketing terms. You got a tripwire, you charge somebody
Yep.
$7 and hopefully they get in
Right.
and they see the value in the $7, so they buy something for $27. The HELOC is a tripwire for a bank. And I know this because I'm a banker, right? Just like Anthony. And something else I wanted to spell too, because Zach said that Anthony was my mentor. When I was learning this and going through this, Anthony hadn't even graduated high school yet. So, and I think
When
Anthony,
when did Zach say that? Did he say that
he
in?
said it on your podcast. He's like, I know Michael's mentor. And he was alluding to Anthony.
Oh,
Anthony
was he?
Anthony
Okay.
learned this from me. I spent 2 weeks at Anthony's bank teaching them how to do this so they could set up the appropriate type of consumer friendly HELOC product. Because that's another part of my business is I contract and do joint ventures with banks and show them how to design banks or sorry, HELOCs that are not only consumer friendly, but they're bank friendly. Because if they're not bank friendly, the banks aren't going to offer it.
Right.
So it's that fine balance of how do you market this and how do you structure the equity product so that you get customers, but you still win. But back to my point, promo rates. So banks have flooded the market with promo rates. So for 4 years, I've had 1.99%. And now this wouldn't make sense in the mortgage world because what do you have with mortgages? Closing costs. So every time, if you got a $500,000 mortgage, you're going to have $15,000 to $25,000 in closing costs. But Sam can back me up on this. The majority of HELOCs out there have zero closing
Yep.
costs and no mortgage insurance. I don't care if you're borrowing 85, 90, 95, or 100% financing, you don't have mortgage insurance.
Mhm.
So if they're offering a promo rate of 1.99% for 12 months or 24 or 36, now I'm not here to say that all banks are offering 1.99. You got to know where to look. And that's a
Right.
part of what our service does is we've got a team that works 8 hours a day, 5 days a week investigating banks. And we got a tall order because when I first started, there was 12,000 banks in this country. Now there's only six,
Yeah.
which is a bigger conversation that we should be having on another podcast. Because if you look at what Japan did, or I'm sorry, China did. First, Japan did it. Japan exploded after World War II. What did they do? They put up a bank on every corner of every major street in the country. And then China said, hold up, how did Japan do this? And they got together and China adopted the same thing. We need banks on every street corner, major street corner in this country as possible. And that's how we're going to grow as a country. But back to my point as far as promo rates, because I can get a promo rate of, let's say 1.99%, let's say it only lasts for 12 months. If it's free to either renew or refinance, I can just keep turning that to
Yep.
1.99%. So if I were to have a mortgage, I've never had a HELOC rate anywhere close to what a mortgage rate is. And I've had probably 8 to 10 different HELOCs over the last 14 years. So I am averaging a new HELOC every 18 to 24 months. Therefore, I'm also never getting close to my draw period. That's the thing behind the veil,
Yeah.
behind the
You,
paywall that people don't understand.
so you, well, so that makes total sense. You're saying that you personally, and a lot of your clients can relate to this as well, are getting cheaper access to money than a 30-year, and then the idea is to get new every 12 or 24, 36 months to renew by moving a different bank, refinancing in a
Or
way,
the
but you don't
same
have
one.
to
Some
what
banks will allow you to renew.
and
They
you're
already
getting
have
less
your
than 2%. You're less than 2%, whereas the traditional 30-year mortgage is above 6 right now.
yeah, 6.65. So let's say what
Yeah.
mortgage rate do you have now?
I have a mortgage that's at 5.2%, 30
Okay.
years.
And you like that because at 30 years, it gives you the lowest possible payment, right? And you want to invest the rest.
Right. I put the rest in a high yield savings account to deploy and whatever. Yeah.
Okay.